Advertising can be one of the hardest parts of running a business.
But from finding the right target audience to measuring conversions, Audience in Motion is here to help.
Arm your business with our state-of-the-art ad tech that can reach an entire region or just a specific household.
Our expert staff provides live dashboards, transparent reporting, and hands-on account management.
All this at a price tailored to budgets of all sizes.
Contact your local Audience in Motion representative to learn more today at audienceinmotion.net.
Advertising can be one of the hardest parts of running a business. Audience in Motion is here to help. Arm your business with our state-of-the-art ad tech at a price tailored to budgets of all sizes. Contact your local Audience in Motion representative to learn more today at audienceinmotion.net.
If money affects your life in any way, Money Making Sense will talk about it. Be financially healthy, wealthy, and wise. Here's your host, Heather Kelly.
Welcome to Money Making Sense, the show that talks about all things money. Today, we are talking about outsider trading. What is it? Why do we care? Are you one? Joining me today is Harry Abrahamsen. He is the founder and CEO of Abrahamsen Financial Group. So welcome to the show, Harry.
Thanks, Heather. Thanks for having me on today.
First of all, I think most everybody heard over the last month about the GameStop, that some people that were using Reddit just overwhelmed the day trading with GameStop and AMC and a few other stocks out there. But then, I don't know if it was the media or Wall Street, they started calling these people outside traders or outsider trading. What is that?
Well, it's I guess we've all heard the term insider trading, right, where people kind of get together and there's some type of a tip and they act on it, which you're not allowed to do. Well, this is kind of the opposite. This is really people on the outside that were on various social media platforms and were looking at, I guess, trends and started to pick a few of the stocks. And instead of those stocks going down, the stocks actually, ended up skyrocketing. And so it's all the people that are on these various platforms that are the people on the outside and not the people that are actually on the inside.
Let's say I work for GameStop. I'm on the board of GameStop, and I go, ooh, our stocks are about to rise. You want to buy some right now before it goes up, and then once it does, you can sell. That would be like an insider trading tip, correct?
Exactly. Like they would have some information that would, typically based on, financials, right, or some type of an inside piece of information. And then they basically act on it, knowing that, okay, this is going to be positive or good information that would drive the stock up. And then they kind of make that decision and then they get into that position or purchase the stock based on that information.
Okay. Now I'm not on the board, don't have anything to do with GameStop. But as you said, I was on a website and other people with the similar interests, we all got together and thought, ooh, what if we just bought GameStop? But why would we want to, as a group, do that?
Well, I think, some of the companies, GameStop, AMC, Nokia, people liked the companies. They felt good about them, and so they wanted to really support them. I think that was part of it. It's almost, in a way, it's like hype trading, right? It's all on the hype. And so the people that maybe were on these sites, Reddit, there's another one, Iris, and they were looking at these stocks and they decided to invest or put their money into these stocks when maybe the financials of the company really weren't the main driving force of why they were making that decision. So they were maybe making this decision that's like, hey, they like GameStop, they like the company, they like going into the stores, yet what's happening over time, people aren't, getting into their car, going to the store because they can just download the game directly. So they were kind of, almost like hype trading or purchasing on something that they felt they wanted to invest in.
Okay, so if I just did it all on my own and nobody else did this, I really wouldn't affect the stock at all, one way or the other, the price of it. But because a whole lot of people decided, hey, we really like GameStop, let's try to help out that company, and they all started buying the shares, then the price went up and up, went from like $7 a share to $400 in less than a week, I think.
Yeah, it was unbelievable. So that when they started to purchase it, that's where really Wall Street was probably in a serious freak-out mode because they were probably shorting these stocks, and that's why the squeeze was on, because they realized they had to go back in and buy the stock as it was going up and up and up, even though the actual financials wasn't saying, hey, this is a good investment long term. So that stock, a lot of people kind of, and it's very, very atypical. Usually there's no way to actually beat the shorts, and it happened. It was a complete inefficiency in the marketplace, and I think it kind of stunned a lot of people.
We are going to talk about shorting so we understand what that is, but this part about it stunned people in Wall Street, big people freaking out, which I kind of love because they freak me out all the time. So why wasn't the market prepared? I mean, aside from the shorting thing, I mean, has nobody in Wall Street ever thought, oh, well, a stock could just do this on its own without us controlling it?
Yeah, I don't think that they. Again, it's a very interesting thing. I think over the next couple of weeks, people are going to really dig into how it actually happened, and as long as there was no collusion, that's the main thing. There was a person that was driving it up, but when this kind of thing happens, it's very unique because it's like really the masses were able to kind of organize themselves in a way, driving that stock up. And I think now Wall Street and a lot of the hedge funds are going to be maybe looking at these platforms a little bit differently because, again, they're very good at finding inefficiencies in the market, and this was one big inefficiency that happened. So the chances of something like this happening again, to the extent that it did happen, I don't see that happening the way this did. But certainly I think that Wall Street and hedge funds are going to be looking at this a little bit differently. Yeah,
my biggest complaint with Wall Street is all that has to happen is somebody makes a suggestion that, we don't think this oil company is going to produce as much oil. They're talking about maybe reducing their oil production. And then prices just go up within an hour. Well, that hasn't happened yet. But just the thought of it, just talking about it, in theory, makes stocks go up and down. It just drives me frigging nuts because nothing else has changed. The oil companies are still producing the same amount as they did an hour ago, and yet the stock is either up or down based on what somebody thought might happen 3 months from now. So it makes me very happy that a group of us little people could get together and freak out Wall Street.
Yeah, and that's certainly what they did. It was like a David versus Goliath, And the stock prices went up, and from what I even understand with like companies like AMC, that there ultimately might be even a silver lining in that because there's a chance, from what I've read, that they had an enormous amount of debt, and because of the stock going up like that, they were virtually able to eliminate the debt, which may have solved their short-term problem, which now might allow them to kind of get back on stable ground and stay in business.
Yeah, we do need to take a break. When we come back, I do want to go into that shorting the stock so we have a better understanding of how all these people who bought into a failing company were able to short the market, so to speak. So we'll be right back with Harry Abrahamsen. He is the founder and CEO of Abrahamsen's Financial Group.
Advertising can be one of the hardest parts of running a business. Audience in Motion is here to help. Arm your business with our state-of-the-art ad tech priced to fit budgets of all sizes. Contact your local Audience in Motion representative to learn more today at audienceinmotion.net.
It's the story of an American held in a dark Venezuelan prison.
They're saying that they want to kill me. They're saying that they want me as their guarantee.
I'm Becky Bruce. I spent the last year working on Hope in Darkness. Find it wherever you listen to podcasts.
Neural networks, random forests, unsupervised learning. These are just some of the concepts being researched and utilized in security today.
But what do they mean? How do they work? And who are the people that create them? These are the questions and more we'll explore in Security Unlocked, a new podcast from Microsoft.
In each episode, we'll deep dive into the newest security research, threat intel, and data science, with a special focus on demystifying AI and machine learning.
And we'll profile the diverse and fascinating people working on security at Microsoft. Listen and subscribe to Security Unlocked, available now wherever you listen to podcasts.
Welcome back to Money Making Sense, the show that if it affects your life in any way, we're talking about it. Today, we're talking a little bit about the stock market, but it's actually about outsider trading. What happened when a bunch of people, Main Street people, got together and started buying up stocks like GameStop, AMC, and Wall Street? They were unnerved completely. Joining me today is Harry Abrahamsen. He's the founder and CEO of Abrahamsen's Financial Group. So welcome back, Harry.
Thanks, Heather. Thanks for having me on.
In the last segment, we talked about why Wall Street was a little bit unnerved about all these stocks going up that they were not expecting. And you had mentioned the reason is because they did what's called shorting the stock. So what does it mean when you short a stock?
Short selling involves predicting whether a particular company or market will lose value or even fail. So typically they'll look at the fundamentals, they'll look at the actual stock, the revenue, all the numbers, and then based on that analysis feel, this company's not doing so well. We think that the value is going to go down. And so what basically happens is that they're, taking that position. And so instead of the stock going up and for them benefiting, it's basically they're betting that it's going to go down. And then if the stock goes down, then they can benefit a lot. Very similar to the Big Short. That was like the book and the movie where when things went down, there's people that are on the other side that are actually profiting from that stock or market dropping.
Originally, as we mentioned, GameStop had been valued at $7 per share before everybody jumped on board. And I can't remember where AMC and the others started, but I know GameStop was right about $7 a share. So you have these big companies or Wall Street or whoever betting that, at $7 a share, this company is on the way out. We're going to short it. It'll, soon be gone. And then all of a sudden, everybody bought hundreds of thousands of shares, driving the stock up to $400. Who had to cover that difference? If they thought that this stock was going to go down even further below $7, but all of a sudden it's at $400, how does that work for the people who thought it was going to go lower?
Well, they have to. So when it starts to shoot up like that, they have to cover the full thing. That's why people were, the funds were freaking out because they realized, wow, they have to get into the market and purchase the stock, which then kind of created the frenzy of the stock getting driven up. Because when you are shorting a position, basically, if the stock goes in the opposite direction, they have to cover all of that, all of those losses, and so they have to make up that difference. So it was interesting. I don't know the exact breakout as a percentage of the outsider traders or the hedge funds going back into the market to buy the stock to try to reduce or cover their losses.
And what exactly is a hedge fund?
A hedge fund is basically they manage portfolios, typically accredited investors, and they kind of, in a way, just to keep it real simple in layman's terms, it's like an exclusive mutual fund, and they all have different philosophies, and they're regulated very differently than mutual funds. But what you'll go into a hedge fund is they'll specialize in areas of certain things, certain categories, and then they're basically diversifying your investments, taking on risk, but also trying to get as much in terms of gains.
And those are some of the funds that my 401k is invested in various hedge funds.
Yeah, I don't know about your particular plan. I don't know a lot of 401ks. They typically have platforms, 401k platforms. And, if it's a 401k, most likely it's through your employer, and your employer is using a platform. And I don't really know what investment selections that are within your platform. They differ from company to company, but typically it's a little bit more in a traditional sense, and they're really, hedge funds are dealing primarily with like your accredited investor, typically high net worth. Otherwise, they're not going to take them on as a client.
Right. Okay. I'm just trying to clarify for everybody, like, where does this lay in relation to me and what I'm doing on a day-to-day basis?
So you may have in your 401k, you may have various stocks, GameStop, AMC, Bed Bath & Beyond, might be part of a category that you are allocating your money into. Then you also have these hedge funds that are kind of on the dealing with the higher net worth client, and they're directly going into these various stocks. So they tend to take a lot more risk. So if you do have any of these particular companies and the financials aren't there, you may want to really maybe look at your 401k and say, hey, maybe I should really reallocate based on what's happening right now. And a lot of times inside the 401k plan, on the on the platform that you're using, they'll have different categories, target-based investing, and based on your age or risk parameters, and you'll be able to kind of pick. And then inside of each one of these categories, you can probably dig in to see what are their actual holdings. When you start to kind of mirror or compare that to, say, a hedge fund, they kind of do a little bit to different approach. It's almost like they're like the SWAT team. They come in, they're identifying one particular stock or one particular opportunity or one particular thing that they specialize in. And so they're kind of approaching it from more of a risk standpoint as opposed to maybe a conservative retirement strategy based on your age.
Okay. We're going to take one more break. When we come back, I want to go into if I'm an individual and I want to do that on my own, A, is it recommended? And B, what do I need to know before I even start? So we'll be right back with Harry Abrahamsen. He's the founder and CEO of Abrahamsen Financial Group.
Neural networks, random forests, unsupervised learning. These are just some of the concepts being researched and utilized in security today.
But what do they mean? How do they work? And who are the people that create them? These are the questions and more we'll explore in Security Unlocked, a new podcast from Microsoft.
In each episode, we'll deep dive into the newest security research, threat intel, and data science with a special focus on demystifying AI and machine learning.
And we'll profile the diverse and fascinating people working on security at Microsoft. Listen and subscribe to Security Unlocked, available now wherever you listen to podcasts.
Welcome back to Money Making Sense, the show that talks about all things money. Today, we've been talking about outsider trading. That means you aren't a Wall Street tycoon. You're not a huge business, but maybe you have affected the stock market in some ways. Several thousand people did the first part of 2021. If you've been watching the news and heard about Reddit, investors using GameStop, AMC, quite a few others. Joining me today is Harry Abrahamsen. He is the founder and CEO of Abrahamsen Financial Group. Harry, we've talked specifically about this group of Main Street people who took Wall Street by storm and they weren't happy about it. But we really don't want to give the impression that everybody should just start going out and day trading or buying up stocks to see if they can influence the market.
Yes. I mean, this is something that if people are out listening and are interested or intrigued by this, obviously they want to take some time and educate themselves just kind of on how it all works, right? And looking at the various platforms. And then also really, I guess a really important step is just to make sure that if you are going to dabble or look into, participating or investing on your own, that, A, you can afford it, and B, you're not using money that maybe you've spent the last 10 years putting aside for something, whether it's retirement or going to be buying a home or second home or something, that you're not, using money where you feel, oh, wow, if the market goes up, this would be great. But also remember, if the markets go down or it doesn't really happen, that you're not putting yourself in a position where, you have a financial problem.
Right. And I always try to encourage people to know that if you are into investing or you want to invest, it's for the long haul. You can't put in $100 into the market and a week later, if it crashes and all of a sudden it says, oh, your investment is only worth $80 now. Think, oh my God, I've lost a fifth of my investment. It's like, well, were you going to cash out a week later? Probably not. But think about it 10, 20, 30 years from now. If you only left that $100 in there, it could be worth, $10,000.
Exactly. Yeah. And people have to remember, too, that if they're even at that point where they can put that money away, that obviously their income that they're earning from whatever a job they have, that they're able to say, oh, okay, our lifestyle is low enough we can afford to take anything that's excess and save it. That becomes very precious. Those are very precious dollars because you're able to now take that money and put it to good use. So you want to make sure that wherever you're putting it or investing it, that you feel comfortable about it. You're very familiar with how it's being invested, and the companies that you're picking or choosing, you have a good understanding of the actual company that you're investing in terms of time frame or how long your time horizon is based on your investment objectives.
Right. And if you don't want to go to a financial advisor, either you think that they're going to charge you a lot of money to do that, or maybe you're just embarrassed because you don't want to admit you don't have a better understanding of A, your own finances, or B, what happens to it once you stick it into the market. So many people are turning to these DIY apps that are out there, and many of them are great, but they all have slightly different uses, and you really have to know for sure what your goal is and pick the app that's going to help you with that goal and not sidetrack you in all these other little, ooh, you want to try some day trading? Ooh, you want to try this? If that is not what your goal is.
Yeah, and you want to make sure if you are using an app that if there's a term that you don't really fully understand, or maybe it just doesn't seem like, what is this? You should always just check it out. They can Google. You can go to different companies that offer information on what this actually is and how it works. And that's really probably something that people should be doing if they are on their own. Also, too, even if you have somewhat of a relationship maybe with an advisor, they're not really getting compensated until maybe money's there. So I'm sure they'll be willing to have a conversation with you about things without actually committing to doing things. So if you had a question about a certain strategy or a stock or a term that you're not familiar with, having that conversation doesn't cost any money. And it's always important to educate yourself, especially when you're making an important financial decision.
Harry, is there anything else we should know about what can we do as the Main Street guy to still get the best return on our investment?
Well, with something like this, it's always having a pulse on what happened with social media. So there's going to be various platforms, things to read, basically sometimes even influencers. There's people that are out there that are very, very influential in the things that they do and say. And if you have a pulse on all of that and you feel like you have a good sense of what's really going on, they may be able to kind of participate in this. A lot of it was driven from social media and various platforms. So if somebody's out there and they want to, just kind of immerse themselves into these platforms, they can certainly have a chance if something else is going to pop up or trend where they can maybe dump on this hype trading and maybe kind of come out on the win side.
And if anybody has further questions, do you help everybody who wants to email you?
Sure. They can check us out on the web. It's www.abrahamsenfinancial.com. That we have a bunch of people that are part of our group that can maybe answer some questions, maybe offer some tips that would help them.
Great. Thank you so much for joining us. Harry Abrahamsen, you are the founder and CEO of Abrahamsen Financial Group. So thank you so much with all the information that you've given us today.
Thanks, Heather. Thank you for having me on.
Thanks for listening. You can email me with any questions or topics you want to hear about at hkelly@ksl.com. That's HKELLY@ksl.com. And because this is Money Making Sense, you can subscribe for free on Spotify, Overcast, Apple Podcasts, anywhere you listen to your favorite podcast, and you'll never miss another episode.
Thanks for being a Money Making Sense listener. Follow your common sense onto social media. Money Making Sense on Facebook, Twitter, and Instagram.
Hi, this is Stephanie Palmer, KSL News Radio Director of Sales, and I hope you're enjoying this podcast. Did you know that last month alone, KSL Radio had more than 200,000 podcast downloads? If your business is trying to reach more people, we can help. Let's talk about it. Text the word podcast to 57500. Thanks. Now get back to your show.
Neural networks, random forests, unsupervised learning. These are just some of the concepts being researched and utilized in security today.
But what do they mean? How do they work? And who are the people that create them? These are the questions and more we'll explore in Security Unlocked, a new podcast from Microsoft.
In each episode, we'll deep dive into the newest security research, threat intel, and data science, with a special focus on demystifying AI and machine learning.
And we'll profile the diverse and fascinating people working on security at Microsoft. Listen and subscribe to Security Unlocked, available now wherever you listen to podcasts. 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 Wherever you listen to podcasts.